In this YouTube video, we are going to backtest our customized option strategy in the Banknifty chart of June. I already marked the portion in which I am going to backtest that option strategy. It is quite a range bound market, and you can see very consolidated one also. So you will going to get a very good idea that what happened when this strategy is used in a consolidated market. If you know that it is a sideways market, you do not need to do any adjustment, then do not do any adjustment. That strategy itself is enough to handle any kind of range bound market. But if you are going to follow the adjustment that I already showed you in a previous video, then you can do those adjustments also. If you do not know or you do not have any good knowledge of charts and price action, then you can do those adjustment and you're still going to get, if the things are not going in your court, then you are going to have a very little loss. Either you are going to make good profit even in the consolidated market. So I'm going to show you that with the same rules and regulations, we are going to do that exact adjustment, and we are also going to see our profit and loss at the end of month if we do all those adjustments in this bank nifty portion of very consolidated market. So without any delay, let's move on to the option simulator. In this option simulator, I already entered all the necessary dates as well as expiry time, as you can see. And let's move on to our strategy. As we already know what are the parameters we need to follow to make this strategy. If you do not know, then I will just recap you very fastly that what we need to do in order to make that strategy. First thing is that we have to sell our put side. We have to sell 20 lots in a put side at 8 delta, around 8 delta, as well as we need to sell call side around 8 delta, 20 lots. Now we have to buy 2 lots at the money in both the side, put side as well as call side. After that, you can see our option strategy look like. This is a short recap how you are going to make this strategy. And there is one more thing that I want to recap before we start doing our simulator testing, that what kind of rules and regulation that we need to follow in this adjustment video. You can see these are all the rules and regulations. This is very quick go through, so you can pause this video and you can see it. Let's move on to our simulator, and this is simulator. We are going to do all the adjustment as per our rules and regulations. So let's move on. Next day, second June, right? So the market has gone down a little bit. It is around the same levels and the premiums are almost the same. So I'm not going to do any adjustment today on 2nd June. So let's move on to our next day. In this, you can see the market actually gone up and the premiums, as we can see, are still there. So I'm not going to do adjustment today again. 6th June, as you can see, market actually gone down and the premiums in a call sell side is actually very low. So we are going to do our adjustment. So as per our second rule, we are going to sell at 8 delta, 20 lots equal in a call side. Then we are going to buy 2 lots. Since this is our first adjustment, so I am not going to square off any buying positions as we already seen in our previous YouTube video. After this, we are going to square off any buy of position according to the movement of the market. So let's move on to next day. As you can see, the market has gone up and the premiums in a put sell side still there. So I'm not going to do any adjustment. And this is the payoff chart right now making 18,000 rupees around. Again, the market has gone up a little bit and premiums are still there. So no adjustment. Okay, the market actually gone down and the premiums are very less in a call sell side. So I'm going to square off this position. As well as I'm going to square off call buy positions because market actually gone down as per our second rule. So let's do the adjustment. Going to sell 20 lots at 8 delta call sell, as well as I'm going to add 2 lots on both the side. After the adjustment, our payoff chart will look like this. Let's move on to our next day. Market actually gone down again, but the premiums are still there, so I'm not going to do any adjustment. It is gone up. So because it's gone up, so the premiums in a put sell side is very low. I'm going to do one adjustment of the put sell side. As the market actually gone up and I am squaring off the put sell option. So I am going to square off the put buy option as per our rule. Again going to buy. Now after adjustment, our payoff chart will look like this. And I'm currently making 15,000 rupees profit. So let's move on to our next day. Next day market actually gone up, spot price is up, and the premiums in put sell side are still there. So I'm not going to do any adjustment. But one thing that you need to notice that the call side is actually gone down. The premiums are actually very less. So I'm going to do adjustment in a call sell side. I'm going to square off. Okay, now we are going to apply our third rule. And according to our third rule is that if the market movement is in up direction, as in this case, the market is actually gone up. And if there is a decay in a call sell position, which is actually representing an opposite direction, so we are going to square off put buy option as per our third rule. So let's square off this put buy option 466, right? After the whole adjustment, you can see our payoff chart will look like same, but our loss in is in middle is actually 87,000 rupees. This is also one indication that the market is actually in the consolidation state. It's moving in sideways. This is it, and we are actually making 19,000 rupees profit. Now let's move on to our next day. In the next day, market actually gone down. So as we can see, the premiums in call sell side is very less. So we are doing our adjustment again. And we are going to square of call buy option as the market is gone down to sell. So the whole adjustment actually done. And as we can see, our payoff chart will look like this. And currently I'm making 13,500 rupees. Let's move on to a next day. The next day, Banknifty again dropped little bit and the premiums are actually very less. So I'm going to do one more adjustment, 24, as well as I'm going to square of call by option, 19. I'm making 12,400 rupees. Following the rule number second, going to buy both sides. And this is how our payoff chart will look like after the adjustment. And, we are on 16 June. There is still time left for expiry. There's around 12 days to go. So let's move on to next day. The next day market has gone up. So in this case, the premium in the call side are there, but in the premiums in the put side is also there. It is around 35 rupees. So I'm not going to do any adjustment today. So the market actually gone down again. So the premium in a call side are gone down again and it is 24 rupees. So I'm going to do another adjustment as well as I'm going to square off call buy option. I'm making 16,300 rupees. Let's do the adjustment. So after adjustment, we can see our payoff chart is around this. It will look like this as we are doing adjustment in a downside direction only. So our most profit is in downside. It is around 3 lakh rupees and the very least is available on upside, which is around 48,000 rupees only. So as the market is actually going down, our downside actually getting more profitable. Let's move on to our next day. Let's see what happened. The market actually gone up little bit and the premiums in a call side is there, but the premiums in put side is very less. It is around 32 rupees only. So I'm going to square off this position and going to do adjustment. As the market actually gone up, so we are going to square off put buy option. So the our oldest put buy option is this one, and it is 44,200 put, and the premiums are actually 529 rupees. We are in the profit. I'm going to book this one 529. Okay. Now we are doing our adjustment. I'm going to buy. Okay, right now I'm actually in the loss around 4,585 rupees. And our payoff chart is look like this with a movement in upside. And you, as you can see, the profit in upside has gone up and the profit in the downside has gone down. So this is the beauty of this adjustment, that as the market is moving up or downside, the profit is also shifting up and down accordingly to the movement of the market. So let's move on to our next day. Bank Nifty actually gone up again. Let's see the premiums. Premiums are actually very low in both the side, but I am going to square off this 27 rupees, and I'm also going to check that at 8 delta, is there any good premium available to us, which is more than 32 rupees. So let's check it first, then we are going to do that just. So in the call side, as we can see that 32 rupees premiums are at 9 delta. So we are not going to do any adjustment. But in the put side, as we can see at 8 delta, I am going to get around 36 premium, 36 rupees premium. So I am going to do adjustment only in the put side. So let's do the adjustment. Okay, I already added the 3 positions, which according to our rule now, but now we have to clear out that position also. So 32,500, we are going to square up at 27 rupees. As the market actually gone up, so we have to square off put buy option. So the oldest put buy option which is available to us is 44 200 put strike price. So let's see what is the premium currently running. It is around 459 rupees. So we are going to square off this one. Okay, after doing adjustment, we can our loss is around 11,507 rupees, and our payoff chart is looking like this after the adjustment. Moving on to our next day. Okay, the market actually gone down after. So let's see what are the premiums which we have right now. So in a call side, we do not have any premiums left. Only 13 rupees premium is there. So we are going to square up that 13 rupees 44,900. So actually market actually gone down. So we are going to square off call buy option, and the oldest call buy option which is available to us is 44,200 call C. So the premiums currently running are 65 rupees. So let's enter. Okay, now we are going to add positions according to our rule. Okay, I added 3 positions which we need to do. Let's see the payoff chart after the adjustment. As we can see, this is how a payoff chart will look like. And currently I'm running 10,400 is lost. Let's move on to our next day and see what happened. We still got time, almost 1 week. Okay, the market actually gone up. So let's see the adjustment, what we need to do. Premiums in the call side are rupees only 17. So we are going to check if there is any premiums more at it delta. But for that, we are going to check our put option also. It is around 20 rupees only. So let's first check what are the premiums available at 8 delta in a call as well as in put side. The premiums are more in a put side. So I'm going to do the adjustment. Remember that our market is actually gone up. So we are moving up. So we have more premium available at 8 delta in a call. Okay, I already added all the positions, but now we have to square up the positions which are actually with the low peak. Let's see. First one is a call sell option, which is around giving 17 rupees. Now put sell option is already having 20 rupees. Now the most important thing that you need to see is that we are going to do our adjustment in a put buy or a call buy square off. The most important thing that you need to know that when you are square offing both put sell side as well as call sell side after a movement in the market in an upside or in a downside. In this case, in this particular case, as the market has gone up, we are doing adjustment in the both the selling position. So for that, we are going to square off 2 positions of put buy option because the market has gone up. First one is for put sell option. That is the reason we are doing that adjustment. And other one is for call sell option. For that, the market has actually gone up and we have done for that the market has actually gone up and we are square offing the call sell position, which is actually showing that market is moving down, but in reality the market has gone up. So we are doing our adjustment as buying. We are doing our adjustment by buying put buy option. So we are applying basically rule number 2 and as well as rule number 3 at the same day. So let's by square offing the two positions of put buy option. So the oldest one that we have available put buy option is 44,200, and the premiums which are currently running are 519, or you can say 512, 20, 520. And the other one is 44,000, and the premiums are 370. Okay, after the adjustment, as you can see, we are making loss of 33,400 rupees, right? And our payoff chart is look like this. It clearly shows that the market is moving up. So our adjustment is done in such a way that the market actually gone up. We are in the profit. So let's move on to our next day and see where market is actually going for. So 43,700, right? Now the market actually gone up, but very marginally. As we can see, the premiums put and call sell options are very low, which is around 11 rupees. So I'm going to do the same thing which I done in a previous step. I'm going to square off both the positions if there is a more premium available at 8 delta, right? So let's see first if there is a premium available, we are doing adjustment. Okay, and I am currently making loss of 53,000 rupees. So there is a premium available to us and it is 17 rupees. So I'm going to do the adjustment. As well as in the call side also, there is a more premium available to us. So we are doing adjustment here also. So we are going to do buy option on both the side. I added all the four positions. Now it's time to square up the positions which actually we left. So we are going to square both these two positions, 42,800 and 44,500 at 11 rupees. Okay, as the market actually gone up, so we are going to square off two put buy positions. So the oldest one put buy option which is available to us is 43,700, and the premiums are currently running 43 are 148 rupees. Now the other put buy option that is available to us is 43,600, and the value is currently running is 109. Okay, after the adjustment, we can see that our loss is around 53,000 rupees, and our payoff chart will look like this. Okay, there is almost 3,000 rupees profit available in downside, and we have almost unlimited profit on the upside. And there is only one day left in the expiry. So let's see what happened on our next day. That to market actually gone up, and let's see what are the premiums which we are going to get. So the put side is actually totally no premium left. It's around 3 rupees only. So we are doing adjustment, and call side actually we are having 56 rupees. So let's do the adjustment in a put side. And as per our second rule, we have to square off this position of put sell with 3 rupees only, and I am going to square off put buy option as per our rule, but we are going to only one position we are going to square off. So 43,900 is a position we have to square off, and the premiums which are available to us currently running 43,900 43 is 33 rupees. So let's square off this position, 33 rupees. Let's add our positions. Put sell side, 15 rupees premium is available on the day of expiry. I'm going to add okay, this is the positions I actually added, and I'm currently making around 9,000 rupees profit after the adjustment. And our payoff chart is look like this. We are totally in one direction, and we can make almost unlimited profit in one direction. So let's move on directly to our 3:30 time, and we see that how much profit I am going to get. Okay, the market moved up as per our spot price, and I'm currently making 51,000 rupees profit, 3 o'clock and 20 minutes. This is the maximum profit I'm going to get is 51,000 rupees, which is very good. And there is one thing that I want to bring in your notice, which I already told you that our adjustment are actually happening according to the movement in the Bank Nifty. So as you can see, Bank Nifty is actually going up
our positions are also moving such a way that they are actually giving a profit in our up direction. If you go and see in a Bank Nifty chart, in the positions I took in the duration of June month is clearly in this area. But after that, as you can see, the market has actually gone up very aggressively, right? Even if this 1 day shiftment is actually happened in the market, the Bank Nifty expiry is 28, so we are not going to get the profit because of that movement in a up direction. But that adjustment is actually is in a such a way that market it automatically identifying itself that market is going to go up, right? So as you can see, it is clearly visible in a chart also, Bank Nifty chart also, that market is going up. And if that happen, then we are actually making an unlimited profit. And this is a very awesome strategy, and adjustment is more awesome than this strategy is. So this is the plus point of this strategy. But there is one more thing that I want to bring in your notice is that the adjustment itself is very costly because you have to do a lot of adjustments. See how much adjustment I am doing in continuously. So in order to make the our strategy in such a way that it will react to each and every movement of a market up or downside. So we have to do a lot of adjustment in this process, and obviously because of that we have to pay STT prices, government charges, as well as the bank brokerage charges. So this is one negative point of this strategy, that you have to do a lot of adjustment in this strategy. And other than that, you may have noticed that in the middle of this simulation where of this strategy, 50 to 55,000 rupees loss. So in if the market actually doesn't move so much, in that case we may going to get that loss. There are chances, I'm not telling you that there are no chances that we are at a in the loss, but there are chances that market could give us loss even though we are doing that adjustment. So because we are buying so much, because of that decay, we could get losses. So before moving and ending this video, let me show you one more thing that I like to share with you is that earlier I already mentioned in the video that if you have the knowledge of the market and you are reading the charts and you know that this market is very sideways market and it is going to be a sideways market for a very long period of time, then if you are not doing any adjustment, which I already told you, and rules and regulation, then what will happen? Let me share with you that thing also. So let's cancel everything. So this is our initial strategy that we already made. And if you are aware of that market is a sideways market, so in that case, we are actually making only 6,000 rupees, which is very less. We are not doing a single adjustment. We already took all the positions and we are just sticking to that strategy. And with that strategy, we are actually making only 6,000 rupees, which is very less. We compare with our adjustment that we have done in this video, then it is very less. So this is it that I like to show you. I hope you like it. And if you really like it, then please like and subscribe this video. Thank you. Thank you very much.